Maybe. We are witnessing once-in-a-lifetime events here, folks. Commodities have basically replaced the FANG stocks thanks to this geopolitical environment. We have the Federal Reserve meeting coming up in this hyperinflated market where we have no idea what's really going to happen with interest rates over the coming quarters. And on top of that, I want to discuss the stocks that interest me the most this week and generally just the fascinating companies that I think are still worth buying here. If that is a conversation you can appreciate, first and foremost, hit that like button, folks. But we got to talk about the short squeeze of a lifetime. And no, it's not GameStop. It's nickel. Who would have saw this coming? Nobody. But basically because Russia's one of the largest exporters of nickel, lots of going on with selling to China. China's a huge battery metal place as well for the exploration of those kind of metals. But take a look at this because, my God, most of these metals trade off futures contracts because they're selling them into the future. And something happened here that not even I can wrap my brain around in this short period of time of watching this. Just literally double overnight here, guys. And they've halted the price. Never, ever in nickel's history have we ever seen this happen. And I don't know exactly if this could be some deeper conspiracy of Russia continuing to try and disrupt the global commodities market. Nobody really knows, but holy hell. And it's crazy because you can't even buy nickel stocks that are flying up with this. I noticed that when I went through all the largest nickel miners, they're not really moving based off this price action, which is kind of mind-blowing to me because oil is purely traded off its price action. And it's nice to see because they're leading into the reserves. And I don't know how long those reserves can last. Basically, the US said, hey, look, we're going to all these countries that have stockpiled oil and we're going to lean into those stockpiles to basically bring the price down in the short term. But how they work that out in the long term is still going to be very fascinating. But hey, at least we're going to feel this at the pumps. And of course, if you're trading ExxonMobil or any of these direct oil exposure plays, yeah, they're trading down against it. I have made a bet on Enbridge on one of the dips, and it's only down about 2.5%, being a third-party exposure, primarily just an oil pipeline, natural gas company. So we'll see how far that drops, how much pain that I'm going to experience. But I bought it because it's a Canadian company. Canadian companies are much more stable, and I don't expect as much mood swings with a very high dividend yield. So we'll see how this plays out because I still think commodities are going to be the topic of this year. Now let's talk about the Federal Reserve meeting because the only thing I want you to note here is that the last update, officials projected inflation would run at 2.7%. Obviously, we're much higher than that, and I think the Fed's going to do the exact same thing the Canadian Treasury did, which is primarily just increase interest rates at 0.25 basis points, and that's going to test the market out. And honestly, I think they just want to wait to see if inflation can work itself out. They think most of this with the supply chains, a lot of this oil stuff is going to start bringing inflation back down as it cools off, and that's what I think they're crossing their fingers is going to happen here, because if this persists, we're going to go back to the 1980s. We're going to see much higher interest rates, and it's going to get very more volatile moving forward. But that's what's generally affecting the markets here, because a lot of people are anticipating lower interest rate hikes at that 0.25% basis point there, guys. So that's driving up a lot of interest into the Fed meeting because they think that they're going to be more inclined to help the market rather than hinder it. But, Jerome Powell said if things get worse, they'll raise the interest rates. But taking a look, almost everything's green across the board here outside of the Canadian markets. This is the first day where I've noticed the US markets are really outperforming my Canadian stocks. But let's talk about some individual holdings that are just driving me bonkers. And Facebook has to be one of them, continuing to hit 52-week lows here at a PE of 13. And when I scroll down and read the news, guys, I just want to slap somebody. Like, read this: Meta, not innovative. Its metaverse is doomed, former Nintendo exec says. Facebook's parent says users can't post calls to assassinate Putin. Here's one from Yahoo Finance: pure value, but has a lot to work on or work in to keep their future going, or to primarily keep their user base. No offense here, guys. Facebook right now, over 25%, around 25% of the global population of every human that exists, that's 1 in 4 people, are using one of Facebook's apps. They've largely unmonetized all of their platforms. Yeah, you're not going to get crazy user growth. User growth isn't going to double in the next year. There's just no way, because basically everybody's already using the platform. And I love Oculus. I think this is going to be the future. I think Facebook is well into innovation, especially at this bloody price. I don't know what to say about it. I hold my Facebook shares going long still, folks. And along with Alibaba is one we have to talk about. I think because in recent talks, the US just had a meeting with China. China's kind of playing Switzerland here. Like, China kind of tiptoed around it and just basically said, we want to work with everybody here, because at the end of the day, guys, we're a global economy. And yeah, Russia's doing crazy stuff, but China's really, they're putting themselves in a weird spot, which is what I think is primarily driving the market down here. But it was neat to see that even Kevin O'Leary started buying Alibaba on this dip, and he was one of these guys that wouldn't touch China. So that says a lot about the valuations on these current companies. And just take a look here, because this is where the whole China talk Russia thing comes into play. I really recommend that you watch some of the highlights that came out of those discussions. Obviously, some officials that have been kind of eyeballing what's going on in the Russian state said, yeah, China's trying to help them out, but China's saying, look, we're not getting involved here, right? But either way, putting that aside, folks, I still don't think we've washed out the entire market yet. And I'm saying this as a speculation because nobody really knows, obviously. But when I'm talking about the general markets, there's only three companies that are generally holding up the entire indexes right now. And that is Apple, Microsoft, and Amazon here, guys. And none of these are being not largely as impacted as many of the other companies sitting on the FANGs that are sitting in the S&P top 10, because when you're talking about things like Netflix, like Tesla, like Nvidia, they're all trading down like 30% or more, yet all of these companies are trading between 10 and 15% down. And the reason that I say you want to pay so much attention to them is because basically, take a look at this, guys, over 15% of the Vanguard's S&P 500 index, because it's largely market cap weighted, is held up by these three companies. So over 15% of the indexes are held within these three stocks, and they continue to decline by, say, even another 2, 3, 5, 10%. That could easily drive the entire S&P down, generally by a few percentage points, which would continue to put us into a bear market, right? Which is where the NASDAQ 100 is currently sitting. So I'm still relatively bearish, depending on what the Fed does, depending on how this geopolitical events work themselves out, which we're still in the eye of the storm here. So I don't think we're by any means outside of this. And again, this has been an ongoing thing for months. This isn't something that's going to unravel overnight, which is why I said when you're looking at companies that I think are good buying opportunities like Shopify, like PayPal, which continue to find 52-week lows, that you can wait till these things start to turn around. And when the market starts feeling a better vibe overall, which is obviously hard to predict, but I think once the war cools down, once the inflation rate cools down, it'd be pretty easy to pick up the rallies back, because even if Shopify jumps 50% for whatever reason, we are still a long ways away from being at the all-time high, guys. I mean, look at 50% is only going back to basically 188 a share, but something tells me you'll have lots of opportunity to get back into that as it rallies back, because again, it's the escalator up. And well, actually, it seems like we're taking the escalator down. Usually they say it's the escalator up and the elevator down. So I'm going to presume there's going to be lots of opportunity to buy these things over time. Now, my interest, as much as I'm going to keep an eyeball on these tech stocks that I want to try and do a quick swing trade on the rally back, I'm primarily still focused on building out that dividend, those juicy dividends, that passive income that's going to perpetuate itself into my future. And many of you know I've been really gobbling up a lot of dividend stocks. So I'm kind of frustrated that the companies that I really, really want to add to my portfolio are jumping pretty aggressively today. I mean, we're talking about things like McDonald's, things like Procter & Gamble. These are the ones that I think would really proponent to the diversification of my general overall portfolio. So I'm going to keep an eyeball on these guys. I'm really hoping they don't jump back after the aggressive dip that they took, because these are lifelong hold-based companies, and these yields are just highly unattractive at these high valuations. So I'm fingers crossed over the coming months as dividends bleed into my account that I can start reinvesting them into companies like this just for longevity, because again, keep in mind, I already have my tech stocks. Now, on that note, folks, I really want to pass the question off to you. What do you think about this? What a wild market. Let me know what you think in the comment section below. Consider subscribing, because obviously we'll do future updates. Might do a live stream tonight as well, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.